Tax liens. On one hand, it is very low risk as it's guaranteed by the United States government, and you could end up with a property while paying only 1 to 5% of the home's value. However, on the other hand, it has low liquidity and there are some risks involved. We're going to dive into everything you should know about tax liens. But before we dive into it, I do need to share a disclaimer to make sure you're well informed and we're legally sound. This is not a solicitation to invest. The information presented through this video and any subsequent communications is for informational purposes only. It is up to the individual to determine their risk tolerance and financial aptitude before engaging in any of these strategies. Strategies of this nature come with a high level of risk that may result in complete loss of your capital. Do not risk what you cannot afford to lose. If there ever is a doubt or question about a strategy's application to your individual situation, please consult with your own personal licensed financial advisor. All right, we're through with that. But for tax liens, it's literally guaranteed by the United States government. So in my humble opinion, this isn't that high risk. But nonetheless, we're about to dive into our results from the 10-step vetting process, starting with past performance. So when you purchase one of these tax liens, you can get anywhere between 8 to 36% interest depending on the area you get them. Tax liens essentially are an opportunity for people to pay other people's taxes for their property taxes when they don't pay them. And property taxes are super important to the government because local governments use property taxes to pay for schools, roads, parks, and many important public services. And this ensures the government gets the funds they need for those services. And then to incentivize you for paying those taxes, they give you 8 to 36% interest per year. And if the person you're paying the taxes for doesn't pay the government back, then you get the property. This happens about 5% of the time. The majority of the time, you get your funds back plus interest. Area number 2 is industry, and we're dealing with taxes and real estate. Both those industries are very stable. I mean, as long as you think the government's going to want taxes and people are going to need a place to live, there's a good chance those industries are going to stick around. And another thing we like to look at in industries is supply and demand. And one of the coolest things for this industry is that it is illegal to make a group or a company or a team or have anyone buy tax liens on anyone else's behalf. So, as we know, taxes and places to live, aka real estate, have a really high demand, but now the supply is being limited. So you can't build a team to buy these tax liens, which if you're starting small is actually a great thing for you because this is designed from preventing certain people from or companies from dominating the market, right? So that means you're not competing against any team or company that's trying to dominate the real estate market and buy up all the real estate and outbid you on everything. No, you're competing only against individuals in this industry. Next, we have risks, which are low, but the biggest risk in this industry, from what I've seen, is ending up with a property that was completely neglected. Maybe there's mold, property damage, or just some surprises that make it not a valuable property. And this does tend to be more common with people who neglect taxes because people who neglect taxes are more likely to neglect keeping up the quality of their home as well. Starting costs, there are no starting costs except the price of the tax lien that you choose. And as for ongoing costs, the ongoing cost is once again just the price of the tax lien. Property taxes tend to be 1 to 2% of the property's value. And for major beautiful apartment complexes or shopping malls, that can be a lot. However, if you're starting small with just residential properties, you can get started in tax liens for as low as $250 to $500. Maximum funding, no maximum. You can buy as many as you want. For company history, we're going to scratch that out because it doesn't apply for this. It's backed by the United States government. Liquidity is low. Your money could be tied up from anywhere from 1 to many years. Each county and state has different rules for their tax liens, and we're going to show you how to learn all those rules on one page where you can see all the different rules of how much interest you'll get and what the time frame is for each county. The time commitment for tax liens is low. However, I will say a lot of people like to tie this up with real estate rental businesses and Airbnb businesses, which could add a substantial amount of time. Ease of use. The ease of use is relatively easy. However, the most successful tax liens investors tend to like to use a software or some other resource to verify that they're not buying a tax lien for a completely neglected property. And in a moment, I'm going to give you access to a ton of resources that will help you succeed in tax lien investing. However, before that, if you're enjoying this video, please subscribe, like, comment, let me know what you think. And we're going to be releasing over 20 proven winning opportunities and all types of advanced strategies millionaires and billionaires are using to scale their wealth over and over again. Now, as promised, for the first resource, I need to recommend that you look at Ted Thomas's free content. He is in his 70s and is making 7 figures doing tax liens, and he's literally sharing his secret sauce just because he finds it fulfilling helping other people generate time and money freedom, kind of like me. In that resource we were showing earlier that shows all the different time frames that the different counties have for how fast you get your returns, actually was a resource created by Ted Thomas, and he's giving it away for free. We also have a resource of our own where we put links to every single place where you can buy tax liens through the United States government, their official .gov websites, which only the United States government can do. We also put together our own resource, which is a spreadsheet with links to each website that you can buy tax liens on online. We don't get paid for any of this, by the way. And these are the official government websites. And we also put in the spreadsheets the time frames of when each ones are available, because some areas you can't buy them online. Other areas only offer them once a year, and some areas offer them year round. So we put that information into a spreadsheet with the links. So if you see any of the areas that you like, you can easily access any of the tax liens that you're looking for. And I just want to close with, I respect that you are educating yourself on building wealth. It is one of the most liberating things to have enough funds, aka money, to not have to trade your time for money ever again and just get all those choices